In this video, we will talk about TPL, Texas Pacific Land, and whether I should buy it now after a 20% drop. This is one of my favorite company of all time, maybe my favorite company of all time, and it has dropped substantially, 20%. If you are new to this YouTube channel, welcome. My name is Christophe Nour. I have been picking stocks for almost a decade with a performance of 25% per year. And I cover TPL on my channel, so here is an update for you guys. So, let me show you the recent decline of the stock, minus 20%, roughly 20% over the past 2 weeks. So, it's been only down and down and down. And I sold at this moment, just here, just when it started to drop. And let me scroll back, let me zoom out a little bit. If you think that this 20% decline is a lot, please zoom out, because it's nothing compared to the upside we had over the last few months. And if you see what happened in summer 2024, the stock was included in the S&P 600 inclusion in an index, and the stock has always gone up and up and up and up, and at the end of 2024 the moves were completely crazy, and you have this jump here, this 15% jump in one day, when it was announced that the company was going to be included in the S&P 500 because it's big enough now. And normally what happens when a company is included in the S&P 500? Now institutions, funds are forced to buy TPL when they buy the S&P 500, so you have additional demand, and this was kind of priced in by the market because of this big jump. And usually what happens when you have this inclusion, you have more demand, but most of the time these are overextended stocks, expensive stocks, and you have a lot of profit taking. And it seems like this is exactly what happened for TPL. If you look at the valuation for TPL, this was a stock trading at, I don't know, 80, 90 times earnings. It was completely crazy. I'm here on Stock Unlock, where you can see the stock price. Like, it's a 20% drop, like nothing happened. Really, the stock is up a lot year to date. Year to date, the stock is up, viewer percentage, 150%. So I don't worry, I don't panic at all about TPL. And what about the valuation right now? Even after the 20% drop, we are talking about a PE ratio of 70. Still overextended, still overvalued. So if I want to see the free form. If I go to the valuation of TPL over time, you clearly see that as a valuation tool, we will use the PE ratio. If you look at the PE ratio, we are still at the expensive level. In other words, nothing has changed for the thesis. I sold TPL when it reached a valuation of 80, and I sold, if I remember correctly, I sold around here at $1,650, and now the stock has dropped a little bit with a PE of 65-70. This is not in a normal level. You see that these variations of valuation, this is not the first time it happens. Actually, the business is cyclical when it comes to valuation, so I don't worry at all, and I'm willing to hold. So if you clicked on this video, you wanted my tech, I did not buy TPL after the 20% drop, and I am still waiting. Now, what is a good price for TPL? By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, let me show you some Guru Focus stuff. Guru Focus is my go-to website when I want to have a quick look on the financials of a stock. So let me show you what I see for the business. Basically, if you don't know TPL, if you are not really familiar with the business, they own lands in Texas. This is a realty business, and you are talking about 90% margins. So you can see very high margins, high return on invested capital. PE ratio is now over 65, 70. Forward PE ratio is at 50. So still expensive. When I bought the stock in November 2020, it was here, and the valuation was PE of around 20-25. It can happen. And I bought more here in 2023 at a valuation of, I don't know, 30. Let me check here. 2020, I bought in November here, PE of 21. And I bought again here in July here, so PE of 25, 27. It can happen, guys. Don't panic, don't FOMO in, don't think that this is your best opportunity to buy the stock. It can drop more, it can drop a lot more, and you can drop from a valuation of 70 to a valuation of 30 in a couple of months. It has happened in the past, in 2021, 2022, it happened, guys. So I would advise to not rush into the stocks, because the story has not changed. It's not as if we had a new CEO or a new business segment that grew out of nowhere. The business is not likely to change fundamentally in 2025, 2026. The growth is still here, the cash is still here, the cash flow is still here, they do some dividends. The business has not changed, it's just about the valuation. Now you may argue that the growth will improve because of AI in Texas and you have to build data centers, so you have an additional segment. Okay, let me go to the DCF for you guys. If you think that the free cash flow, or let's say the earnings, we talked about PE ratio, if you think that the earnings for this business are going to grow by 15% over the next 5 years, without any buybacks, without any growth in dividends, it doesn't matter. And if you think that they deserve a PE of 25, in this case, the business is overvalued by a lot, overvalued by 100%. That means fair value of 50%. It needs to be cut in half so that it reaches fair value. Okay, now if you think the earnings are going to grow 20%, you are still overvalued by a lot. And the fair value is 40% below this price. So the fair value would be around $800. And now we are at a valuation of 1,300. So let me zoom out. How can I zoom out? Zoom out here. $800 would mean we go back to September levels. It was not that far away. It was not that long ago, guys. You go back to September levels, 800, and only 3 months after this we are at an extreme level. It can take 3 months to go down, and it will be decent, and I would be happy to buy at these levels. My assumptions where I buy the stock is I think they can grow 15%, and I would be comfortable buying at a P of 30. So my assumptions is that the stock is very overvalued right now, but I would be comfortable buying at, that's it, $750, $800. I can greed a little bit, but not more. If it drops to $1,000, I'm waiting. If it drops to $900, I'm waiting. I want the stock price to decline to around $800. That would mean a PE ratio of around 30. I'm comfortable with that. So to answer your question, no, I'm not buying TPL back right now. I still think it's overvalued by a lot, and I expect the decline to continue. I wish it continues. I wish it continues so that I can buy more later. And it's okay, because I'm here for the long term. I first bought the TPL position 4 years ago. It made me a lot of money, and I'm comfortable buying and holding. It's just that the valuation is too extreme now. I bought here, sold here. I'm waiting for the price to drop, and I will buy more to hold for years and years. It's just that it has become an extreme valuation right now. But I hope it continues to go down, and I will keep monitoring the stock every day of the week, and I will keep you posted. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.